Hello, this is why you should consider buying a whole life or variable universal life insurance policy. The typical video you're going to watch is going to say, by no means ever buy this product because they say it's too expensive when you compare it to term life insurance. Now, I'm here to tell you that universal life is excellent, or a whole life policy, for the right reasons, for the right person, and it's not really competing with term life insurance. I would consider, for the people that are eligible under my concept, that you should probably have both. Obviously, life insurance is an income replacement for the people you're leaving behind if you're to pass away early, before you've got money set up for your wife or education and living expenses for your children. But people have different kinds of income streams. Somebody that's got a very steady job, like a public school teacher or a police officer, you could consider that very different from someone who maybe owns their own business or has like a W-2 job where they might go from job to job in an office or in a factory or something like that. So a universal or whole life insurance policy is going to give you incremental increase in your value each year, with dividends, and with the stability of the growth in the policy outside of the constant cost of the policy. I would also recommend purchasing it at a younger age. It's important also not to buy too much. You want it to be an annual premium that you can cover in the future as easily as you cover it the day you buy year one. So it's always going to be the same price, and you've got to make sure that that number over the years is going to become smaller and smaller and smaller to your relative income and what a number looks like to you. When you're beginning this idea to buy a whole life policy, my main argument is that it's going to offset other life insurance and other investments, and it's going to also get it out of you to buy more life insurance. I'm someone who believes you should have a little bit of life insurance, not an outrageous amount, not so much that if you were to go, your family would be better off without you, or they would be just as good. I'm not so sure that's the right way to go, because realistically, statistically, people drop their policies because they can't afford them. You do not want to be that person. People never utilize them. Term life policies expire every day. That's why the insurance companies sell them. So they're getting all these premiums in and never pay out a dime. Your policy could lapse, but also it could be voided out if you die under the wrong pretenses. So this policy is really something that you can see as growing. And for people with more volatile jobs, they don't have many things like this. And I would say it's a good milestone to keep the policy and have it offset against your other investments. And take it as a badge of honor when every time someone says, oh, you bought overpriced insurance, or you're wasting money on fees. Well, you know what? You've got it contained. You do have a certain value. You have the ability to borrow from the policy way cheaper. And I could tell you, for someone that's had a policy for probably over 20 years, from time to time, borrowing on it is a good idea. And paying it back is a good idea. And it's happened. And I don't know when it's going to happen again, but should it need to, it's there. It's borrowing without any credit check. It's borrowing without touching your credit report. And it's borrowing quickly and confidentially. And when it comes to buying a whole life or variable universal life policy, I'm not saying just to buy the first one you see. Shop around. I would take 3 or 4 months to talk to different salespeople. I would probably end up at a mutually owned life insurance company. So that's going to bring the field down to about 5. But you're welcome to try, look, and talk to all salespeople. Salespeople, they're going to educate you. That's good. They're going to push you and manipulate a little bit. It's their business. But you're going to get the perspective of someone that sees a lot of people making decisions. And you're going to get the perspective of someone, if you cultivate the relationships, to get their mindset on things and to hear what other people are doing and really put your ear to the market. Another reason why to deal with different salespeople over a period of time is that these products change every so often. The premium rate for a 35-year-old non-smoker is going to change, and the terms of the policy are going to change, like your dividends and your different factors in a whole life policy are going to change based on the marketplace. When the insurers want to sell more policies, they up the value to the customer. When they don't, they lower the value. So you could talk to an insurance agent and they'll say, I've never seen rates this good. And look at this sale I did a year ago, and the rates were half as much on the interest accruing in the policy. It's got a lot to do with the regular old interest rates and the regular economic factors of the time. So you'll be able to correlate it and get a feel. So maybe you visit it for 3 months and the market's in a place where it's going to switch, and you could come back 6 months later and talk to that salesperson and finish out the policy. At some point you got to bite the bullet and get going. But that's a big deal. You can shop the policies. And then going back to the main point, while you're going to get ribbed about buying a whole life or universal life policy, is that people say, well, buy a term and invest the rest. But investing is very emotional. And line me up a group of people that all they do is take all their investment dollars and put it into a low-cost ETF, S&P 500 fund, a whole market, international global equity ETF, and a Wilshire 5000 every total stock market index. Those people don't exist. Okay, people are buying funds they hear about on television, stocks they read about, all kinds of variables. So when it comes, and also people are holding cash. So, and people are selling the best investments at the wrong time and buying the best investments at the wrong time, constantly. So for you to take a little carve out of your investment pool and put it into a whole life policy that's going to give you the ability to grow your funds, borrow money, and eventually, let's say you've made it to 20, 30 years into the policy where you really don't feel like you need insurance anymore, you can grab the cash value back. And these points, I stand behind them. I'm telling you, they're worth looking at. And it's not just, put your head down and walk past the whole life insurance salesman. Not at all. Not in any case. Thanks a lot.